All right, hey everybody, welcome to December 3rd's MakerDAO community call. My name is David. I work on the community development team here at the Maker Foundation. And so we do these calls every Tuesday, and we do them basically to inform our community what's been going on in the Maker universe. I typically go through a bunch of stuff related to what's going on in Maker governance, what's going on with like partnerships, integrations, and grants around DAI. Stuff that we've published as the foundation on our blog, highlights from the community, everything from like interesting threads, great statistics, really cool community contributions. And then I also talk a little bit about some of the events that are going on for the upcoming week. And we also get to have guests on the call every now and then. And today we have a guest. We actually have a couple of guests. Daniel Dewar from Paperchain. And I forget who the man sitting next to him is, but yeah, I'm gonna hand it over to you guys. But feel free to introduce yourselves. But they're here to talk about the really cool pilot that they did with Spotify revenue, advancing it and basically doing royalty financing.
Cool. So you have Daniel here from Paperchain and David.
David Gogel here.
David, I'm also David. Nice to meet you.
Nice to meet you.
And so for anyone who wasn't aware, at the DeFi Summit in London, we did a live transaction working with Centrifuge and the Maker Foundation to advance $60,000 worth of Spotify revenue to one of our record label customers. So if you think about the way media consumption has shifted, it's gone to on-demand, very data-driven, and it's on-demand consumption, but the revenue and the payments process hasn't changed. So essentially taking the concept of factoring or invoice financing, but instead of using invoices, using real-time stream data. So what we do is we connect to the real-time stream data from Spotify, Apple, other streaming providers like that. We take the data and then we price it so we can recognize revenue earlier in the pay cycle, and then obviously advance revenue based on the data that we're capturing. We always believe that MakerDAO could be a very compelling and also a very efficient mechanism for sourcing low-cost capital. And so we talked for a very long time about how we could leverage these assets in the multi-collateral DAI system. So over the period of, say, 3 months, worked with Centrifuge and the Tin Lake system to be able to run this pilot and essentially replicate what could be a transaction on the MCD mainnet. And so that was taking this data, representing that data as a non-fungible token, using Tin Lake. That then gets represented. The value of that non-fungible token is the notional value of the receivable or the revenue in this case. Those then get represented as ERC20s, which then get locked up into the CDP and the MakerDAO system. That transaction has now since been closed. The repayment came back from the record label, and it was a successful closing of the transaction. So while we recognize that MCD is probably some way away from introducing these types of assets into the mainnet and also being able to support at a larger scale, for us it was really about proving that this could work, and it was. It was a very efficient mechanism for sourcing low-cost capital because it changes a lot of things around the dynamics of sourcing capital and originating loans. For us to originate this, the transaction time to originate was less than 30 minutes, which was the time for the block confirmations. The origination cost was a couple of dollars in gas. And then the cost of the capital was significantly cheaper than what was being offered by other competitors in the market as well.
So Daniel, tell me a bit about that. What is like the current state of traditional like royalty financing for artists?
Well, I would say in some ways it's bordering on predatory. So you have hedge funds and other credit funds who are charging anywhere up to 45% APR for advancing royalties. Much more speculative. It's not data driven. So it's just basically more like a long-term loan, looking at saying, well, here's what you generated last year. I'm going to give you $100,000. You'll pay 45% on that. In a lot of cases.
Are they typically unsecured in those cases?
Yeah, well, actually, the way they secure it is the artists have to give up the rights to their IP or their assets or their songs.
Oh, wow. Okay.
And so what this represents is an opportunity for artists to maintain ownership of their IP and their assets and look at it in a much more short-term way based on actual generated data in market, because there's enough of that for us to leverage as collateral.
Yeah, we view a lot of the existing solutions as borderline predatory, and 45% APR loans when your counterparty is an Apple or Spotify, which are as investment grade as it gets, really doesn't make any sense. So we were able to structure a secured, de facto a secured loan through the assignment of future revenue based on our pricing model. We assigned a 72% loan to value estimate based on our estimates. We ingest a bunch of data over a 24-month period. Our revenue assessment for Spotify was within 25 basis points of the actual, which is really great. And so applying kind of an LTV ratio on that, was a way for us to create a secured loan. We also filed a UCC lien against that future revenue to also increase kind of the security of the transaction. So,
question. I imagine that like the longer the term the loan, the more, well, I guess the lower the loan to value ratio should be because of that. Like the longer out, it's just harder to predict the revenue stream, right? And that is kind of already built into your model, right? So what kind of time period do you expect, like, I guess, to be a standard, or can you guys create products around any sort of time period, whether it be like 3 months to like a year to 5 years?
Well, we're starting with earned revenue, just unpaid revenue, because then obviously that can be quite set in how what we consider a loan to value or risk profile of that. But we're already getting asked for what a longer term advance may look like based on unknown revenues. So that not only has a different LTV, but that also has a different risk profile and a different cost of capital entirely. So the way we think about it is not only it's counterparty. So, Spotify and Apple, which would be considered high grade credit, is different to maybe a Deezer or another streaming provider or a Tidal, for example. So there's a different counterparty risk in there, but then also the product type as well. So we haven't really split out what we think those would be yet. Again, that probably, especially if it's leveraging MCD, that becomes a community conversation around how the wider community also assesses and prices that risk. But we're doing a lot of work so we can actually present, here's our risk assessment and what we think this pricing is at. Does everyone agree with this?
Got it. That makes a lot of sense. So, so the pilot, how long did it take from starting to talk about it to actually doing the transaction?
We started talking about it in April this year, and at that stage, we talked about it internally even at the end of last year, when we're talking about the possibilities for introducing other assets into the Maker system. And then talking with Greg on the Maker team about that earlier this year. And then that sort of started the conversation, introduced to the Centrifuge team who had this idea around how they could put these assets into MCD. So it's been ongoing planning since April. And then really the execution and build started in early August or end of July.
Nice,
and then we executed that on September 11 at the DeFi Summit. So basically, it got to the end of August. We were working with this label for a number of months and tracking their revenue and doing the estimates and maintaining like a log of our estimates versus the actuals. At the end of August, at September 2nd, we assessed based on their streaming activity as well as the per unit rates. We estimated that they generated $83,400 in August. They actually generated $83,700, so we're only $300 off the estimate there, and able to then connect that using Tin Lake into Tin Lake, which we can then push into the MCD testnet.
Right. Okay. Cool. That makes sense. So then, question for you: what's the role of Tin Lake compared to Paperchain?
So let's say we're on the risk and in terms of like the risk assessment and underwriting. And then Tin Lake is really our gateway into the decentralized finance world. So it's our ability to represent that as a digital asset, or these synthetic receivables as digital assets, which we then can connect into different sources of funding from the DeFi world.
So Tin Lake actually is the one who would be issuing like the ERC20 or whatever token equivalent of like this tokenized loan agreement that you guys are creating. Right. Okay, cool. Yeah, that's fascinating. By the way, anybody on the call, if you guys have questions, feel free to type in or jump in and ask if you got a mic. This is absolutely totally fascinating to me because I think that this falls into this category of assets that platforms like MakerDAO, but specifically MakerDAO, will be able to like take on. Right? There's going to be like it. It reminds me of like when I first heard of Uniswap liquidity tokens being used as collateral. I was like, oh, it's like damn, like that's so smart. And then like that whole trade shift partnership, like from like a year or two ago, they were talking about tokenizing like these accounts receivables, and I was like, man, this is going to give rise to like a lot of liquidity if this could get pulled off. So then, yeah,
just quickly on that, like, and the reason also that we found it so compelling is, okay, we were able to originate this in less than 30 minutes. So in that time, we had 60,000 DAI in our wallet.
right.
To get that, because what we have to do is essentially we have to abstract a lot of that from the businesses. So we take that 60,000 DAI, we convert it into fiat, and then pay that to our customer account. So we're essentially a back office credit line, and that's we leverage. In this case, MCD is the source of capital.
Right.
So to get that 60,000 DAI into our wallet was less than 30 minutes. For us to get that into our customer's bank account took around 4 days, nearly a week to do that. The last leg of that was us running around with a check and literally depositing it in their account. So there is that friction there from going to, from crypto to fiat and back again. But to us, it makes us more bullish on that case, because then the opportunity is, well, if we have this $60,000 and maybe a label needs to make 100 or 1,000 different payments in a month, for us to be able to then officially split that again into what we call like artist wallets, whether it's a Coinbase wallet or something like that, to do that in a very efficient, low-cost way. Again, it just proves the value that there's a much more efficient financing mechanism out there than what is currently offered in the traditional financing world.
Oh, totally. That's 100% right. That's 100% right. So tell me a bit about like the legal framework of the organizations involved. So like Tin Lake issues these ERC-20s while you guys like spec them out and put all of these numbers to them, like the loan to values and like the actual loans themselves. What is it like in terms of like organizational structure and all the legal stuff that has to happen in the real world?
So the way that was issued was through an SPV was created, which was an entity between 3 organizations. That everything was assigned to that SPV. So the rights of future payment, the lien was filed against that, and that SPV has is the owner of the NFT as well. So in the case that of a default, the CDP would be essentially, or the maker community via the CDP would have entitlement to what sits within that SPV as that gets assigned to it.
Got it. So if somebody like a keeper were to buy a liquidated vault, right, or CDP with one of these paper chain like loan ERC-20 tokens that represent this thing that you guys created, this royalty financing, would it have to be like a special keeper? Like, what does having the ERC-20 token legally entitle you to? How do you like redeem it? Do you guys expect regular users to be touching them, or only like specific like whitelisted type entities?
We haven't really thought about which entities would be able to access that. I mean, we just see it as keepers would bid on the ERC-20 tokens. You're using on-chain data to make a value assessment of the assets. The proceeds would come from the off-chain sale and converted into DAI, and then the DAI would be sent to the keeper of the ERC-20 token.
Got it. Nice. All right, let's see if we got any questions in the chat. I'm about mentally tapped out. I'm looking through this this post that you guys put together, which, by the way, if anybody on the call has some time to read through this post, it's absolutely filled with some really great infographics and numbers and diagrams to help understand like the structure of this thing and how it's able to work.
Yeah, I think for us, a big part of the pilot was to really test it out end to end to see what it would look like. I think we learned a lot doing it. There's definitely some friction points that we've identified that we're working to solving to productize this at scale. But I think a lot of the operational and cost efficiencies that Dan mentioned are very real, and that's what gets us excited, especially as compared to existing solutions in the market.
Yeah.
Nice.
And I think the other part too that wasn't built out for the pilot was like pricing Oracle. So we have being able to have an active feed that we can then feed back into the CDP or into the system as well. So I mean, that's definitely on the roadmap for something ongoing and potentially what we'd look at for future pilots as well.
Yeah, that's interesting. So for a price oracle, it would have to be like the assessment that you guys at Paperchain basically give these ERC20s, right? Because well, I mean, there's two of them, right? There's the loans that basically are just advancing the funds that are sitting there unpaid. So you pretty much have a very low risk with those, right? Besides like counterparty risk. But then there's the loans that are financing or advancing like unearned funds, right? So,
Right.
So I'm just trying to think through this. So if you were to do a price oracle for a set of ERC20s, the first would be a lot easier than the latter, but the latter would have to be like kind of sliding around as you guys collect data and run them through your models, right?
Correct. Yeah. So part of that is while largely low risk, there is instances where, say, in fraudulent streams, the actual may not be what was in the reported statement that we get on a daily basis.
Yeah.
For someone like Spotify, we don't see that fluctuate too much. For someone like Apple Music, we do see quite a large variation where there'll be a reported value and the difference between what actually ends up on the statement is anywhere from 10 to 12% different. Wow. So being able to provide a feed to say that these assets or these tokens are actually worth what we said they were 30 days ago, depending on the counterparty, may be fluctuation. So being able to monitor that. But again, we kind of factor that into the LTV, which is why we started with 73%. And over time, that can get improved based on performance.
Right.
And then more long-term, again, it's basically taking in, this is what their activity is in market, and this is what the revenue looks like over time.
Yeah, so you start off super conservative, and then you scale down with the efficiency, or make it, tighten it with the efficiency. It's a better way to say it. Cool. So Matthew Rabinowitz asked in the chat how you guys handle the tax.
Tax on whose behalf?
I assume on the artist's behalf, but Matthew, if you have a mic, feel free to jump in.
Yeah, forgive me, I joined a couple minutes late, so I really don't know the history of the exact structure you put together. But if a borrower in this scenario is borrowing money from an SPV, and they're going to borrow principal and repay that principal plus interest, presumably, depending on the scale you're dealing with, that borrower is going to want to expense that interest and would then send that, I'm assuming this is a domestic US entity, would send them a 1099. And the question is, how are you going to handle the tax on your end? Because then you have a 1099 that shows up as interest revenue, and you need to send a 1099 from your borrower where your financing is coming from. The tax is like the elephant in the room with off-chain lending stuff. Yeah, and that's something we spoke about with our legal team throughout putting the transaction together, and something we're working through at the moment in our post-mortem on what that looks like, particularly as it's coming up to the end of the year. So once we've reached what that looks like, happy to share more.
Yeah, that's definitely a fascinating question.
Yeah, I mean, I think there's implications on the tax level, both for us as an entity, and then potentially for maker holders as well, based on the interest that they earned. So, I think these are open questions that we're working through, and from a structuring standpoint, trying to minimize that across kind of the board.
So, what's the size of the royalty financing market?
I mean, what's being financed today, you're probably talking around $400, $500 million. In terms of what's actually sitting in that 60 to 90 day accounts receivable, that's probably around 4 to 5 billion from streaming royalties or revenues.
Right. Right. And the only reason that market seems to be that small is because of the predatory and just like totally inefficient way that it's being done right now, right?
Yeah, exactly. But all of that revenue sits at a 90-day pay cycle, typically 75 to 90 days.
Yeah, so we're really focused on the independent record label market, which is about 50% of the market. You know, that's about $5 or $6 billion annually. But you know, I think the beauty of kind of this model and what we've built is that we're able to start with music, where we see a big need today, but there's also the opportunity to expand, you know, this to other verticals, film, gaming on Twitch, programmatic ads. There's a lot of capital kind of stuck in this supply chain that, you know, we can easily integrate new data feeds, and, you know, price that in real time based on the intricacies of the market, and then provide similar types of products to those end customers. So, you know, I think the team comes from the music world, and that's where we have a lot of the distribution and knowledge today. But our roadmap is really to expand across kind of the digital media landscape, starting with music, but we see kind of a large and growing market across the board.
Also, in terms of what that advanced market looks like, if you're talking about like the role that a record label plays to the artist, you'd probably find that you're talking in the billions as being advanced to the artist, because that's simply the way the role of the record label right now is they're the bank or the financing infrastructure. Mm-hmm. As the industry shifts to more of a artist or creator-led economy, what's going to happen is the only reason why you would have an artist go to a label is to essentially get an advance, or to get paid faster, or to leverage its banking or financial services. What we really see the opportunity is that an artist would have to sign a traditional label deal again. They could use us as the financing infrastructure or their banking infrastructure, and a label just becomes a marketing services division for them. So, I mean, that's where we see the industry heading over the next 5 to 10 years. And it's just about how do we put ourselves in a position where we can be that financial infrastructure for them to leverage.
Yeah, that's great. This puts a lot more power and flexibility into the hands of artists, and it seems to cut out a lot of the fat on the finance later. So this is really, really cool. You guys are doing great stuff.
Cheers. Thank you.
Thank you.
Yeah. And if anybody has any other questions, we're coming up to the half of the call.
David,
go for it, Pete.
Do you guys have a demo on this that can be shown to people?
We did. I can't remember if we had a recorded demo from DeFi, but we do have a transaction breakdown that goes through how we structured that. I've got to see if there's a recording of running that through Tin Lake. I think there was. I'll have to double check and see if we can post that somewhere.
Yeah, that would be great, because I have some contacts in London who deal with the music industry and the film industry and documentary. So I think they would be quite keen on seeing this.
All right, excellent.
I think the postmortem that we published on Medium is a pretty extensive breakdown of all the steps, and has some screenshots from Tin Lake kind of throughout the process. So
I just sent it to the guy because David posted it your media, and I just forwarded it to the other guys. So I just wonder if visually they can also see it.
Yeah. Okay. I'll double check if there's something there. I think it was recorded.
All right, right on. Well, thank you, David. Thank you, Daniel, for coming on. This was really interesting, and a nice sneak peek at what we might see at a much larger scale in like the coming years, right?
Definitely.
Very, very cool.
Thanks for having us.
What was that?
Thanks for having us.
Yeah, thanks for coming on, guys. Thanks for coming on. All right, cool. So for the rest of the call, we're going to be going through our usual programming. I'm going to go through some stuff we are going through in governance right now. So just a brief catch up. As many of you know, we launched multi-collateral DAI just a couple weeks ago. Actually, 2 Mondays ago. Technically 3, since yesterday was Monday. But we have been seeing quite a lot of friction, quite a lot of success, and just a ton of stuff going on in our universe. So I guess I'm gonna start off with just some governance things, but I'm gonna post the agenda in the chat like I usually do, so you guys can follow along. And if you are watching this on YouTube or SoundCloud or anything like that, you could find a link to the archive of these agendas, so you can go just look up the date, and you could basically look through everything I talk about today. So we have a few different polls going on in Maker governance land. Actually, today, if it didn't already come out about half an hour ago, then at the end of this call, there's going to be a new governance poll going up, basically asking MKR voters to signal about the debt ceiling. So we are there's going to be the option to lower the side debt ceiling by 25 million, basically down from 120 down to 95, and then an option to raise the DAI ETH debt ceiling by 25 million to 75 million DAI. And I think it's a yes or no vote, but I'm not 100% sure how it's structured. I'm going to have to take a look at that. So sorry that I don't have the info. But it's basically coming online at 5 p.m. UTC today, and it's going to end at Friday, same time, 5 p.m. UTC. And hopefully, from what I'm reading in the chat, it's going to be rolled into Friday's executive vote, so it doesn't have to be prolonged, which would cause risk, because actually a ton of Psi was migrated into DAI over the last couple days, and we're coming up very close on the DAI debt ceiling, which is 50 million from ETH and 3 million from BAT. And we're sitting at like a 48.9 million DAI supply, which is really exciting. We've almost flipped single collateral DAI. So single collateral DAI is sitting at 61 million right now. All right, so yeah, so that's one of the polls. It's debt ceiling adjustments. The other three polls that are going on that are going to be ending on Thursday at 5 p.m. UTC are the DAI savings rate adjustment poll. So Maker voters have the option to vote between 0% and 6%. I think the winning vote right now is an increase to 4%. So if it passes and it goes through on Friday into an executive vote, we're going to be seeing a 4% DSR possibly. The other two polls are stability fee adjustment polls for DAI and for Psi. For DAI, since there's two different vault types, ETH and BAT, I think the community has agreed to actually keep those in line for now as we manage like this migration season. So the DAI stability fee adjustment is both for BAT and ETH vaults. And right now there's an option to vote between for options between 0% and 8%. And then for the Psi stability fee adjustment, which is just the old ETH CDPs, there's also a 0 to 8% range. And I think the winning option for the DAI stability fee is to keep it at 4%. And the winning option so far for the Psi stability fee is, I think, is it 4% now? Bear with me, it's loading on my screen in just a second. Either way, I think it was at 4, but these all end on Thursday, 12 p.m. Eastern Standard Time or 5 p.m. UTC. Why is it taking so long to load? I'll look at it later. Okay, either way. So those are the four those are the four votes that are going on this week. There was an executive vote that passed over the weekend on the 28th of November. Actually on Thursday. So yeah, so it was up since the Friday the 22nd, and it took about a week to pass, if I'm not mistaken. I think I might actually be mistaken, so scratch that. But either way, on the 28th of November, it was executed with 78,000 MKR. The executive vote was to replace the debt auction contract in multi-collateral DAI. It had a very edge case bug that I actually think it was Kenton who found it on our team. So that's been replaced, and also we've removed the MKR Oracle delay in single collateral DAI. And that is basically to reduce slippage, to basically prevent users from overpaying, and also prevent users from underpaying, and it just makes it a lot makes the system run a lot smoother without the MKR Oracle delay and single collateral dies. So MKR voters approved that on the 28th, and those changes have already gone into effect. So there is no more MKR Oracle delay, and there is no more, well, now there is a new debt auction with that bug patched. We've also voted on, I think, the MKR authority to be transferred. And it hasn't been transferred yet, but in the coming, I think, midweek this week or midweek next week, we're going to have an announcement about the details for that. And if you're wondering what the MKR authority transfer is, it's basically the last step. Sorry, I heard somebody say something. Oh yeah, Matthew, you might be right. I don't think. Yeah, I think exactly. So you're totally right. So the Maker authority transfer actually doesn't have to go through a vote because it's something external to the Maker protocol. There's nothing that MKR holders could do to actually change the MKR authority, and that's because the MKR authority doesn't belong to the Maker system at the moment. It actually belongs to the Maker Foundation's multisig. And so the final kind of step for this MCD launch is to transfer this MKR authority from the multisig to it wasn't to DS Chief. I think it was to actually the governance security module, but this is like super specific. But basically giving over MKR authority to the Maker platform and cutting off the foundation's multi-sigs authority. And that's basically in line with our value for gradual decentralization, which is just the principle that as time goes on, the foundation's goal and mandate is to further and further decentralize the protocol and step back more and more as the DAO runs itself, right? Cool. So Matthew's right. It's a two-step process. First is joint authority, and then second, the foundation's authority is removed. Exactly. Yeah. So we're going to be looking forward to some news about that in a few days, hopefully. All right, cool. And then if anybody wants like a quick snapshot of what's going on in governance and you just don't have time, definitely check out this thread. It's called Governance at a Glance. It's a thread that's kept up by one of our awesome community members, Long for Wisdom, and it's regularly updated, and it has the most relevant threads, a little snapshot of what's going on in governance at the top in like 3 or 4 bullet points. It's definitely useful if you want just a quick update for yourself if you're an MKR token holder, but you have a full-time job elsewhere. All right, cool. So that's about it for the land of governance. Definitely feel free, Matthew, or anybody else on the call who's actively participating in governance to mention anything I might have missed. But I'm pretty sure that's most of it. There's definitely a few interesting threads in the forums going on, talking about what our policy should be in regards to maintaining the stability fee and the DSR spread, and how that affects the migration and what our strategy should be. There's conversations about things like loss leading, etc., etc. So definitely check out the forum. There's a lot of interesting conversation going on there. All right, cool. So moving forward, I'm going to go through some of the partnerships that we've seen. Actually, I'm going to pause. I see a comment in the chat from Tahi. Does the foundation have plans to try to increase the proportion of MKR holders who are active in governance? I think this goes hand in hand with increased decentralization. Yeah, actually, so I know at least that Rich, Greg, like a ton of people internal to the foundation that talk with like stakeholders, people who've either bought Maker OTC or who were some of like really old team members. Like we are very much trying to encourage people to vote. Of course, it is definitely on the individual or on the individual organization. We know that there's like several kind of frictions for funds to be able to vote in regards to like security and responsibility, People don't want to like lose their jobs, and also it's like if they vote, it's also representative of is it representative of the fund's view of what that vote entails, right? So like there's a lot of these quirks that are preventing some funds from voting, is what I heard. But yeah, we are actively working to get MKR holders more active in governance. And actually, the community itself is also working on that. I know that there's discussion threads about incentivization schemes for voting and things like that, even though there's conceptual issues with that. But yeah, there's definitely a bunch of effort both on the community side and the foundation side. Yeah, no problem, man. All right, cool. So moving forward, we've seen. Okay, so we've partnered with MyCrypto on their MyCrypto Winter, like website widget thing, that they send to their clients, people that use MyCrypto. Basically, throughout the month of December, you can go through it every single day, and you'll be given a new tip with an action item for you to complete, and those tips are all for the purpose of improving your online life, from privacy and security to financial freedom. So it's just a bunch of like little how-tos and tips on what you could do to better secure yourself, is my understanding. So we partnered with them, so to hopefully better educate crypto users on what it is they're using. We've also seen Stormplay app integrating DAI, and it's offering 10,000 DAI in rewards for using their Chrome extension, which allows people to like get rebates in crypto for shopping on a bunch of different websites. We saw SportX made the transition to multi-collateral DAI. Fulcrum created a migration recipe so that their users can migrate from iSci to iDAI. That's like the equivalent of CDAI or CSci to CDAI on Compound. It's pretty much the same idea. We saw Coinbase upgrading their users into DAI actually yesterday. That was really fun to see. I think they contributed 5 or 6 million of the 12 million that went into the migration contract yesterday. So they did it. I think DYDX did it. I think Kraken did it, and a few others with some smaller amounts. We also saw Changelly supporting multi-collateral DAI. You can now trade DAI on Changelly. And I just saw this right before the call, but Reino, I don't know how to pronounce that. It's REINNO, launches an interest-earning DAI account for their clients. And I think Reino is like a real estate blockchain type of platform. I don't know too much about them, but obviously anything I mention here, do your own research. Don't ever rely on me. Don't hear anything I'm talking about as like an endorsement. I just see stuff and I tell you guys about it. All right, so that's about it for the partnerships, integrations, and grants for this week, at least for the stuff that I saw. From the Maker blog, we saw one really awesome post. We do these monthly posts called Making Maker. And so the November edition came out and it highlighted a bunch of stuff because, as you know, November was MCD launch, and it was a really, really big month for Maker. So definitely check out that blog post if you want a good review of the month. All right, cool. Some stuff from the community. This is one of my favorite sections besides governance. So we actually have an upcoming AMA with hosted by Masari with our foundation president and COO Stephen Becker, and that's actually going to be today in 3 hours at 4 p.m. Eastern Standard Time, and 4 p.m. Eastern Standard Time is 9 p.m. UTC, I think. So definitely check that out if you want to listen to Steven. He's a really brilliant guy. Definitely fun to listen to for AMAs. All right. We also saw Mariano Conti do a week 2 MCD stats tweet, and I'll just read off some of the stats because it's just fun to read them. But yeah, 42.6 million DAI. That's at 49 now. 67 million Psi. That's at like 62 now. 760 70,000 ETH backing MCD, 1.3 million ETH backing single collateral DAI, 6,700 MKR on the burner and growing. Almost 2,000 vaults opened since 18th of November. 4 million DAI in the DSR. And 3,500 chai brewing. And for those of you that don't know what chai is, it's actually like a ERC20 wrapper for DAI locked in the DSR. So you can actually send DAI locked in the DSR around if you use chai. And that was made by the DAPHub guys, Martin Lenfall, and some others. I'm blanking out on names right now, but yeah, chai is really cool. We also saw a number of huge migrations. I mentioned that a little bit earlier. And actually, I highlighted a thread by Alex Svanevic. He's a data scientist at D5DAO, but he posted this really cool chart basically showing the Psi balance in the migration contract jump up to 10 million on December 2nd, yesterday. And when it was at 10 million, it took about 20 minutes for all of that Psi liquidity to be eaten up, which is totally fascinating. I think today we've seen a little bit more time because I think we've seen like 5 or 6 million put into the migration contract actually like right before this call started. And that's, let me actually check, but I think that's there's still around 1 million in there last time I checked. Yeah, there's 680,000 DAI currently in the migration contract, and it's basically for the last hour. About an hour ago, it was 6 million, not 600,000. So it's really fascinating to see like people migrating and just how quickly it happens. It's just mind blowing. All right, moving forward, some developer creations. There's actually a few really cool ones. ohmydai.io. I read a little bit about it like when I found it, but I'm actually blanking on what it is. Oh yeah, so multi-collateral DAI is here. Do you think it will keep its peg? Yeah, so I think it's like a options contract. It basically lets you bet. Yeah, it creates a type of option, but I'm super hazy on the details. I actually think I might invite them on the call in the coming weeks to talk about what they built in their idea. But yeah, ohmydai.io, definitely check that out. We also saw DeFi Saver come out with DeFi Explorer, which is a new vault explorer for MakerDAO's MCD. And if I'm not mistaken, I thought I saw news that they integrated a DEX as well on DeFi Saver that like aggregates stuff they pull from Kyber, Uniswap, and Oasis, but I couldn't find the tweet when I was looking for it, so I might be wrong about that. It might have been some other platform, but either way. Next, we also saw DexWallet.io come out with this thing called DDAI, and it's on Kovan right now, but it's like I thought it was such a cool idea, but it basically lets you take the interest that you earn from wherever they're depositing your DAI, whether it be Compound, DSR, or whatever you want, and then they use the interest earned to do whatever you want, and they give you options like use your interest to earn DAI, which is like obviously the basic one. You don't do anything with your interest. You can convert your interest to Ether. You can long Ether ×4 with your interest. You could short Ether ×4 with your interest. You can automatically convert it into KNC. You could there's literally like I think 12 or 14 different options, and probably will be more because you can do a lot with your interest, right? But I thought it was a really great idea, and Alessio and the Dux Wallet guys did a great job, and I think they won some awards for that too. I think Fulcrum BZX gave them some kind of like really cool award, but yeah, nevertheless, some really cool stuff coming out. And then finally, just a couple more things. Notable thread. Is it troubling to auto-convert Psi for your users? So this is a Reddit thread that I saw on the MakerDAO subreddit, and I thought the conversations in there were really interesting. So if you are a person who's developing a DApp that currently uses Psi and like you're wondering about this question, what people think, check out that thread. Yeah. And then for the videos, this is actually an older video, but I saw it today. But there was a full panel connecting cash to the internet with BitSpark, MakerDAO, and OSL brokerage. And this was, I think, earlier this month. I just managed to miss it, but it's really fascinating how that might work. Can you please share a link to DDI? Yeah, absolutely. So here you go, my man. All right, and then for real events, there's only 2 of them that I saw on our internal calendar. One of them is in Seoul in Korea, and our BD rep, Mr. Dew, is going to be over there representing. It's the TechFin Asia 2019 Expo. And then in Tokyo, Japan, Kathleen will be representing at the Future of Blockchain conference on the 9th. Yeah, so Dew's thing is on the 6th, and Kathleen's thing is on the 9th. Yeah, cool. And that's about it for real life events. I think December is very much kind of an afterburner month for for us. Holidays are upon us. MCD has happened, and I think right now everybody is gathering their brains for the upcoming sprint of the new year. So yeah, that's it for all of the updates I have for you guys. Thank you so much for being on the call, and I'm gonna leave it open for questions or discussion basically for the next 10 minutes if you want. But if there's nothing, I'm gonna end the call a little bit early. And also, Ed, nice what is it, the Maker logo on your wall back there?
Thank you.
Did you make that yourself, or is that a print?
No,
No.
I fabricated that with some barnwood.
Oh, dude, that's sweet. Can you make me a system diagram out of barnwood?
That would take a bit longer, I think.
Right on. No, but that's really cool.
Thanks, David.
Yeah, no problem, Pete. See you later.
Take care.
All right, guys. Looks like it's a down day. Everybody have a good one. Take care.